Welcome back to another Explainer Econosite viewers. Let's just jump right in, because today we are looking at a completely mind-bending macroeconomic reality that is silently shaping global finance. We're talking about state-owned capital on a scale that is honestly hard to even comprehend. It's an absolute mountain of government-owned money that operates like a giant chessboard, with governments using this cash to maneuver, secure their futures, and wield massive global influence. $13 trillion. Let that number sink in for a second. As of 2026, over $13 trillion is held globally by state-owned investment vehicles. To put that into perspective, this isn't corporate revenue from companies like Apple, and it's definitely not private billionaire money. This is entirely government-owned wealth. It's this massive, unified financial force that's just moving global markets, scooping up prime real estate, critical tech infrastructure, and equities all over the world. Basically, it makes these nations major shareholders in the entire global economy. And if you're wondering where this enormous stash actually sits, it's heavily concentrated in Asia and the Middle East. They've really figured out how to take massive export surpluses and decades of compounding oil and gas money and turn that into permanent financial leverage. But look at that massive green circle up top for Norway. They are a total geographic outlier, and honestly, their strategy sets the absolute gold standard for how this kind of capital can be deployed. So here's how we're going to unpack all this today. First, we'll look at the $13 trillion state stash. Second, we'll define exactly what sovereign wealth funds are. Third, we'll zoom in on Norway's amazing success story. Fourth, we'll tour the Middle East powerhouses. And finally, we'll check out new funds and their future goals. All right, Section 1, the $13 trillion state stash, and where it actually comes from. The crucial thing to understand here is that this money isn't just appearing out of thin air through domestic taxation. It's the direct result of massive national export surpluses and incredibly lucrative oil and gas revenues built up over decades. Basically, when a nation exports way more than it imports, especially in the highly profitable energy sector, it ends up sitting on billions, sometimes trillions, in excess cash. State-directed asset accumulation is simply the strategy of acting like a giant corporate entity. They sweep up those profits and lock them away to systematically secure their economic future. Moving to Section 2, defining sovereign wealth funds. A sovereign wealth fund is essentially a government's way of investing its excess cash into global assets. The main goal? To defeat what economists call the resource curse. Now, the resource curse happens when an economy gets way too heavily dependent on one single volatile industry. Like oil, right? When oil prices are sky high, times are amazing. But if oil crashes, the whole national economy goes down with it. By taking those profits and buying a totally diversified portfolio of international stocks, bonds, and infrastructure, these countries build a massive financial shield against a sudden industry crash. Now, why should this matter to the average citizen? Well, because these funds build absolute war chests for future public infrastructure and sustainable development. Think of it as a nation's multi-generational savings account. But, the way it's implemented varies wildly. While some nations use it to fund massive future mega projects, in other places, like the U.S. state of Alaska, the returns are actually used to provide direct annual basic income dividends right into the pockets of everyday residents. It's a hugely powerful mechanism for wealth distribution. Okay, Section 3, Norway's success story, the $2.1 trillion giant. The sheer contrast we're looking at here is just staggering. Norway's Norges Bank Investment Management, or NBIM, was founded back in 1990 with a super strict mandate to responsibly channel their excess North Sea oil money. Fast forward to 2026, and it holds a record-breaking $2.1 trillion. But here's the kicker. Their population is just 5 million people. They've managed to build the single largest sovereign wealth fund globally for a relatively tiny population, executing one of the absolute best macroeconomic strategies in modern history. If you do the math on that, it translates to over $350,000 in sovereign wealth for every single Norwegian citizen. Now, they don't get that handed to them in a physical check like they do in Alaska. Instead, it acts as this supreme economic buffer. It guarantees an incredibly stable economic environment, it funds stellar public investments, and it creates zero fear of the resource curse. It pretty much ensures the country thrives even as global energy demands inevitably shift away from fossil fuels. Let's look at Section 4, the Middle East powerhouses and their $5 trillion in assets. Looking at the global rankings, the Middle East is an absolutely dominant force in state-owned capital. Saudi Arabia's public investment fund is sitting at $1.15 trillion, and they're using that money to aggressively rebrand and diversify the Saudi economy. Just below them, the Kuwait Investment Authority holds over $1 trillion, and Qatar brings in another $580 billion. The sheer scale of capital generated by Middle Eastern oil revenues over the last half-century has built regional funds that collectively exceed $5 trillion. It literally turns these nations into global investment kingmakers. But a decentralized approach can also amass massive wealth while mitigating internal risk. Take the United Arab Emirates. If you combine their funds, which includes the national government and individual emirates like Abu Dhabi and Dubai, they actually control over $2.6 trillion in total assets. You've got ADIA at $1.18 trillion, ICD at $429 billion, and Mubadala at $385 billion. It's a multi-pronged, highly diversified strategy spanning multiple state organizations, letting them take on different risk profiles across global industries, all at once. Now, you might be wondering, is this strategy strictly for oil states? Actually, no, not anymore. Look at Turkey, a non-petro state which founded its own Turkey Wealth Fund back in 2016. Fast forward to today, and it holds $360 billion in assets. But instead of just buying foreign stocks with oil cash, they use a different model. They fully own the port of Izmir and hold a massive minority stake in Turkish Airlines. It's a really aggressive, strategic way for a non-energy nation to consolidate, protect, and grow its state assets under one massive financial umbrella. And finally, Section 5. New funds and future goals. Where is all this money heading next? We're seeing new players enter this space all the time because the benefits are just undeniable. For example, in April 2026, Prime Minister Mark Carney announced the Canada Strong Fund. It's starting out with an initial $18 billion, instantly making it the world's 55th largest sovereign wealth fund. The goal here is distinctly strategic and geopolitical. The Canadian government wants to use this capital to invest in strategic priorities across the country and actively diversify their trade partners, specifically to reduce their heavy economic reliance on the United States. Over time, Canada hopes to organically bolster this new fund with their own mining, oil, and gas revenues. It's a revenue model somewhat similar to its neighbor, the $88 billion Alaska Permanent Fund. But notice the stark contrast in philosophy here. While Canada focuses on top-down, strategic national trade priorities, the state-level Alaska Fund operates completely differently. It famously acts as what many consider the only existing large-scale example of universal basic income, paying out a direct, predictable annual cash dividend to everyday Alaskan residents. So as global sovereign wealth blows past that $13 trillion mark, it leaves us with a massive paradigm-shifting question. As these state funds get larger and larger, will we see more countries leverage them to pay direct Alaska-style dividends to their citizens? Or will governments keep the capital tightly controlled for national megaprojects and geopolitical leverage? It's an incredible space to watch.